management or ownership of this station. It's time to get on the right path with Right Path Real Estate Radio with Jason Bible. Get the answer to your question that's keeping you from taking action and succeeding today.
Oh, we're doing a show this morning?
Yes.
Get ready. The guide that will put your fears behind you is on the air now. Taking calls at 713-785-1817. Toll free 877-881-0271. Now here's your host, Jason Bible.
Hot mics.
Welcome to the show. Welcome to the show. Jason Bible, Right Path Real Estate. Post MS 150 edition. Hope you guys had a good ride this weekend. I haven't gotten an update from my buddies that did the Ironman in the Woodlands this weekend either. I'm kind of curious if any of them qualified for Kona, because I think this was one of the rides you can qualify for Kona, or one of the races you could. So hope everybody had a good weekend. We had a great weekend riding the bike from Houston to Austin with the team. We ride with the brewery here in town, St. Arnold. A lot of fun. Sarah, my wife, has not ridden in 10 years, and she's been training really hard. I think she did about 900 miles before the ride this weekend. Beat her best all-time time, how do you do it? Personal record, maybe is the way to say it, so it doesn't sound so weird. But she beat her personal record, which she set over 10 years ago, by an hour on Saturday and 2 hours on Sunday. So it was a pretty good ride. Weather was perfect. Just a really good time. I think my oldest son went rock climbing all weekend with the Boy Scouts. Youngest one was over at a friend's house swimming the whole weekend. So it was definitely a good weekend. And whenever I'm out on the bike, I've always got some time to think about stuff. I don't have any time to research the news, prepare for the next show. Just kind of got thoughts running through my mind. And here's what it is. It's always fascinating to me. We'll put on one of these free events or a weekend retreat. Actually, we've got an event coming up Wednesday. If y'all want to come hang out with us in DFW, we'll be at Gillies starting about 6:30 Wednesday. You can go to rightpathrealestate.com, click on the link, sign up there. It's completely free. Free adult beverages, free food. We'll see you there. So whenever I'm at any of these events and I'm chatting with somebody, they'll ask me, well, Jason, I'm going to flip some houses, I'm going to wholesale some houses, I'm going to do some rental properties, blah, whatever. They come up with this grand plan of how they're going to build a gazillion-dollar empire. And I just throw cold water on that thing right from the get-go. I'm going to go ahead and warn you, this happens every time we meet. Because let's be honest, it's not like we're meeting for social hour. We're not meeting to become friends. You want to meet me because we want to have a discussion about real estate and how to build wealth. So I'm going to throw cold water on whatever your plans are. And here's how I do it. I'm going to ask this question. Hey, what are you trying to accomplish? Well, I'm just trying to flip 3 houses this year and buy 5 rentals. I'm like, no, that's not an accomplishment. That's an activity. Where are you trying to go? What are we trying to do here? Here's what I'll tell you. It's interesting. The bike ride this past weekend. We have a path. In fact, we knew for the last 6 months we need to do this type of training. We need to put in this kind of miles. This is how fast we need to do these. We need to do these miles. We need to pedal at. In fact, we even have it down to how fast you're supposed to be pedaling and how much power you're supposed to put into the pedals. Think about that for a second. We started 6 months ago how fast you need to turn those pedals over and how much, it's actually called power, measured in watts. We knew how much power you have to put into each pedal stroke 6 months before we rode the MS 150 to get us to Austin. I want you to think about that for a second. That's just to do a little bike ride for 2 days. That's how serious we took getting to Austin. Let alone, I haven't even started talking about retirement yet. That was just to reach that goal. In fact, we backed it all the way up to, we know we need to eat this type of breakfast. We need to have this much water. We need to start at this time in the morning. We have about a 10-minute window. And then we need to be on the road. On the road, we need to be pushing these pedals so fast, like at this speed. This is what's amazing. A lot of people miss this because I hear this too. Well, Jason, for me to retire, I'd love to have 10 rental properties, but you know what? I'd take 20 too. I'd take 20 as well. I'd do 30. I'd do 40. Well, here's the problem. Just like anything in life, riding the bike at 15 miles an hour versus 25 is a whole different ball game. It's a whole different training regimen. It's a lot more pedal strokes with a lot more power. The diet is even different. The bike is even different. I can tell you right now, the buddies of mine that did the full, and I can't ever remember what it is at the full marathon. It's 112, 120 miles on the bike. Their bike looks completely different than the bike Sarah and I were riding this past weekend. Even though we were going further. Put that one in your brain for a little while. We were going further, but the bike that the guys were riding in the Ironman this weekend looked completely different. In fact, their margin of error is a lot smaller than ours is. So if you look at your retirement, you come up and meet me at a weekend event, at a free event, and say, Jason, this is what when someone says, I just want to buy a couple of properties, or I'm just trying to do X, Y, and Z, all I can hear in my head, it's kind of like Peanuts. You guys used to watch the old Peanuts cartoons when the teachers would talk, and the teachers, it would sound like wah, 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 wah. This is what it sounds like to me. When someone says, Jason, I'm just trying to do X, Y, and Z. I'm just trying to buy some flips, do some rentals, get some wholesale deals, do some owner finance. All I hear in the back of my mind is, I'm just trying to ride my bike. And you can play back this show. You can do a little research. What's the difference between riding the MS 150 and doing an Ironman? They are as completely different, as oil and water. They are completely different. But both are riding a bike. Yeah, that's true. Flipping and wholesaling. But it's real estate, right? Well, that's true, but it's kind of like when somebody says, well, Jason, I want to do multifamily. Or I want to do single family, and then I'm going to do more single family, and then I'm going to go up and I'm going to do multifamily. And I'm like, well, why do you have to do multifamily? Well, because I went to some weekend event where there was a guy in the front of the stage selling a multifamily coaching package. What is it you're trying to accomplish? Because I can tell you the plan we're going to get to put together to ride the MS 150 to get you into Austin by Sunday is going to be completely different than an Ironman you're going to do all day in the woodlands. And depends. Let's even talk about doing an Ironman. Do you just want to do an Ironman to say, hey, I've done an Ironman? Or are you trying to qualify for Kona? Because I can tell you those two things are completely different. I got friends of mine that run a marathon. And you guys know there are those who run a marathon, and then there's those that run a marathon. There are those that run a marathon to get it checked off in their to-do list, like, hey, I did a marathon, check. And then there are other friends of mine that are qualifying for Boston. Those are two completely different games. Oh, yeah, you're both running. You're both running the same day. You're both running at the same event. But your training regimen, the race itself, your goals, completely different. So I'll get people at the weekend or meet me at a free event. This will happen Wednesday night, guarantee you. Jason, I'm just trying to buy 5 or 6 houses. Why? What are you doing? Well, I'm just trying to ride my bike to do what? What are we doing? Are we doing an Ironman? Are we doing an MS-150? Shiner Gasp is this weekend. You going to do 100 miles from Austin to the brewery? What's our goal here? Because the goal is what dictates everything else.
2 minutes.
What's the goal? If the goal is to buy some real estate, you will fail. I'll tell you that right now. 97% of the people that try to get into this business fail at it. And one of the big fail points is they have no goal. Or their goal is so ridiculous, it doesn't even make sense. I just want to buy 2 or 3 houses. Well, what are you trying to accomplish? Well, I'm trying to retire in less than 5 years. I'm not sure that strategy is going to work for you. Or if they say, I'm just trying to buy 2 or 3 houses, then my next question is, okay, where? What do you mean where? Where? What do these houses look like? Well, I'm just trying to buy 2 or 3. No.
1 minute.
It's I'm going to go for a ride this weekend. Great. Are you right? Are you in the Ironman in the Woodlands? Or are you doing the MS-150? Well, I just need a bike. No, you what? Go to a bike shop and say that sometime. Hey, I just need a bike. Okay, what are you going to do? What do you mean, what am I going to do? What are you going to do with the bike? I don't know. Might do an Ironman, might do the MS-150. You're going to have to pick one. Get back from the break. We're going to talk more about this, and I want to go into how to build a good goal for a retirement plan. It's Jason Bible, Right Path Real Estate.
Mike's off.
Selecting a foundation company and their product for repair is a lot like a game of chance. You simply don't know what you're going to get. The foundation repair industry as a whole doesn't carry a license, nor is it regulated. However, Foundation Check utilizes professional engineers to review all of our files to give you the best foundation analysis in today's market. Remember to check before every repair. Call 346-702-3825, or you can reach us online at foundationcheck.com.
Are you a realtor or seller that is concerned about the new TRID rules and closing on time? I'm Jennifer Hernandez, Senior Loan Officer at Legacy Mutual Mortgage, and we have mastered the 30-day close. We close on time, accurately, and with tons of communication. You'll have a dedicated team of a coordinator and a contract-to-close associate. Give me a call today at 713-579-3611, and let's talk about how we can help you on your next transaction. NMLS 514497.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give Next Gen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties, whether it's a flip rehab or a rental rehab. No more managing it yourself. No more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992.
Real estate investors, if you're not familiar with Quest IRA, let me tell you what you're missing. We've got free weekly educational classes, networking opportunities, and the ability to tap into trillions of dollars for your real estate investing deals. Come by our office or join us remotely as we simulcast all of our educational classes every Tuesday morning and evening. For more information, call us at 1-855-FUN-IRAs or visit our website at questira.com.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com.
Taxes.
1 minute.
Just the sound of that word makes people cringe. At Anderson Advisors, we provide tax reduction through asset protection for real estate investors throughout the country. Our unique philosophy has CPAs, lawyers, bookkeepers, and estate planners with one common goal, helping you, the real estate investor. Check us out today at andersonadvisors.com, and don't forget to tell us you heard about us at Right Path Real Estate.
Are small returns getting in the way of your retirement plans? Why settle for mediocre results? There's a better place to invest. The experts agree. Single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website, jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
This is Business 1110.
All right, Jay, hot mics.
Welcome back, Jason Bible, Right Path Real Estate. If you want to read something that just absolutely scares the snot out of you, especially those of you who are business owners, and those of you who are involved in or have your retirement, I shouldn't say retirement, your pension fund is with CalPERS, which is the California Education Group. The equivalent of our TRS here, that's the California version. There's a great story. Dysfunctional CalPERS board distracted by petty squabbling as fund lurches toward bankruptcy. And the way this article starts out, the CalPERS board, for all intents and purposes, is made up with teachers and administrative staff who are assisting in making financial decisions for one of the largest funds on the planet. And these people should not be managing money. I haven't read through the whole article, but it talks about the internecine fights between the different board members. There are people that need to manage money, and there are people that, it's I'll give you a great equivalency here. When you go to medical school, you come out as an MD, or when you go through the graduate education side and you become a PhD, I don't want to say an expert, because a lot of folks who attain that level, some believe they're experts, a lot of folks don't believe they're, it's fascinating. As you become more educated, you realize the less you know, which I think is a humble way of saying there's always something new to learn no matter how much I know. So when you go through these, what they call a terminal degree program, MD, PhD, DDS, all those guys, an LLM, when you get out, you then end up in some kind of practice. And what I find fascinating when I talk to the folks who are through their postdoc or MDs who are establishing a practice, so one of the things they realized, they said, I never realized I was going to become a business owner. And being a doctor or a researcher, a principal investigator, and being a business owner are two completely different things. And you'll run into these guys and gals, and they'll say, I wish we had some business classes in the medical school, or business classes in my terminal degree program. Or in the law school, I mean, you certainly have, obviously, contracts and that sort of thing, but real, business classes, how to read a financial statement, some accounting classes. All that to say that should teachers be running CalPERS? Do they have the qualifications to do that? Probably not. Probably not. The scary thing is, they are. when you start looking at these pension funds, look to see who's managing them. That's one of the reasons why I prefer real estate. Just I know who's managing them. It's me or a management company. And if I don't like the management company, I fire them and get another one. It's that simple. I mean, this whole this whole retirement thing is really important. It's not like a bike ride. You could have blown up at the Ironman this weekend, and you'll be sad about your performance. But you know what? It's a good learning experience. Start doing some more training. You can be back in to another Ironman in 4 to 6 months. MS 150 is this past weekend. If you didn't like your performance there, in fact, I think there's another MS 150 in the next 2 weeks. I know it's in the next month or so. They got one in North Texas. They got the Houston, the Louisiana one. Heck, the Shiner Gasp is this weekend. I mean, it's like there's an opportunity to get back on the bike and do it again. However, you can't do that with retirement. You get one shot at this thing. Let's go back to setting a good goal. We got to know where we're going. One of the things that used to blow me away, and I spent tens of thousands, if not hundreds of thousands of dollars on real estate education. And not once, when I signed up for any of these real estate seminars, for any of these coaching packages, for any of these consulting programs, not once did anyone sit me down and say, "Hey, Jason, what are you trying to accomplish?" Because truth be told, maybe real estate's not the right venue. What are you trying to accomplish? I'm here at the bike shop, and I want to buy a bike. And what's the first question the guy at the bike shop's going to ask? "Hey, man, what are you trying to do?" Before we spend a bunch of money and time, going through bikes and parts and getting you fitted and getting you all the right clothes and all that stuff, hey, what are you trying to do here, man? I mean, you just trying to ride the bike around the neighborhood with the kids? Or are we trying to qualify for Kona? Or this summer, starting in July, when the Tour de France starts, there will be tour groups that follow the Tour de France. You can follow the route of the Tour de France. It's a chartered tour group. The guys ride through, and then there's the next day, there's a group of people whose dream is to follow the Tour de France, and they'll follow the tour that next day, go on their bikes, pedaling along. You want to go to the Ironman in Kona, or go follow the Tour de France, or do Indy Pac in Australia, need to know that now, because we got to start planning today to get to there tomorrow. And it starts with diet and exercise and all. And granted, this is not, some of you people probably listen the first time, like, this is not a health program. I'm making the argument that real estate is the vehicle. Real estate is the bike. All different kinds of bikes out there for all different kinds of goals. What is it exactly we're trying to accomplish? Jason, I want to make $5,000 a month in cash flow in 5 years using rental properties because I don't want to be an active manager in my portfolio. Great. Let's sit down and talk about what that portfolio looks like. Let's talk about the type of houses, the size of the houses, the value of the houses in today's current dollars and projected in tomorrow's dollars. You guys have all heard of ARV, after repaired value. That's great for getting a snapshot of today's value. We actually have our own value we call predicted future value. And that is, what do we think this thing is going to be worth 5 years from now? Now, is that 100% accurate? Who knows? But here's what I know. We have to have some kind of forward-looking forecast to be able to say, this is where we are now. This is where we're going in the future based off some data in the past and some demographics we see in the future. This is where we think this house will be at 5 years from now. Meaning, This is how much this house will be worth 5 years from now. One of my favorite Stephen Covey quotes, begin with the end in mind. If you don't have any idea where you want to go, then what's the point of even starting? Here's the problem. If you don't have a way to guide yourself to where you want to go, then any path you're on looks like the right path. One of the things we're talking about is, hey, can we get out for a couple of weeks and maybe do the Appalachian Trail when the boys get older? Can we do the Pacific Coast Trail? And here's the planning. The planning is not only being in good physical strength, but there's also some project management skills. Where do we get food? Where are we staying? All that kind of stuff. But then there's the actual path itself. Because there are rabbit trails that go all off the AT. So if you don't know where you're going, anywhere looks like the right place. It's kind of like going to the airport and there's no name of the destination above the gate. And you just walk into the airport and say, is this the retirement terminal? And everyone looks at it and goes, sure. And you just randomly pick a gate and get on a plane. You have to be very specific in what you're trying to accomplish. If not, you're just going to end off in all these random trails. And truth be told, that's why there's very few successful real estate investors. There really are. I mean, we've had to bail out real estate investors that teach real estate education. I mean, we had to buy their private lenders out. I mean, just crazy stuff. Because every deal looks like a deal and it's a good deal. And I can tell you right now, that's not true.
1 minute.
Same thing, like walking into a car dealership. I want to buy a car. Great, we got all kinds of cars. We got cars and trucks, and what are you trying to do? Well, I was thinking about traversing through the 5 state parks in Utah, taking all the back roads, not taking any of the highways. Oh, so this Honda Civic is not going to work. No. Okay, you're going to need a Jeep. You know, it's like, it's that. But if you don't know where you're going to go, how do you know the vehicle that's going to work? Let's figure out what our goal is first. And then let's back into the right vehicle to get you there. Get back from the break. We're going to talk more about this, how to set a good goal. It's Jason Bible, Right Path Real Estate.
Mike's off.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes or binders? The agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. We're here for you. Are you a rehabber, wholesaler, buy and hold, or flipper? Bundling your properties on a single policy will help save time and money. Benchmark has been in business for over 10 years, and we insure over 30,000 properties. Contact Benchmark about our exclusive investor package. Call us and let us show you what we can do for you at 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com. That's benchmarkbroker.com. That's 281-569-4353. Or online at benchmarkbroker.com.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending has originated over 2,000 loans in Texas, valued at over $250 million. Jet Lending will help you evaluate your deals for free and give you feedback on value, cost of repairs, and potential loan amount. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com. Oh, and don't forget about our famous Third Wednesday Super Investor Networking Meeting. Lots of fun, lots of great real estate talk. We'll see you there. Do you have cracks in your brick, doors that stick, or sheetrock that's coming apart? Then you may have foundation movement. Due to our expansive soils in the Houston area, it's probably not a question of if you have movement, but when. Call Foundation Check for a truly independent, unbiased foundation evaluation. Foundation Check has been in business since 2009 and has completed over 1,400 evaluations. We're not in the business of repairing foundations or selling you unnecessary peer work, but we are in the business of evaluating your foundation. Our product is designed for house flippers, landlords, or even owner-occupied properties. Each of our files is reviewed by a licensed engineer. Remember to check before ever repair. Call 346-702-3825. That's 346-702-3825. Or you can reach us online at foundationcheck.com. That's foundationcheck.com.
Hi, Clint Coons here, attorney and avid
1
real
minute.
estate investor. You know, the greatest mistake real estate investors make is not understanding the potential liability that exists from owning real estate. At Anderson Business, Legal, and Tax Advisors, we specialize in protecting real estate investors in all 50 states. In addition to structuring your business for optimum protection, we provide guidance so you pay the least amount of taxes available under the law. We have 150 employees that range from lawyers to CPAs to estate planners and much more. Download our free ebook, The Invisible Investor Strategy, today at AndersonAdvisors.com or call for a free risk reduction analysis and financial blueprint at 800-706-4741. Anderson Business Advisors will help you keep more of what you earn. Call us today at 800-706-4741 and mention Right Path
you there?
Real Estate.
Yeah, I'm here.
Okay. I was listening to music here.
This is Business
Oh, perfect.
1110.
Just in time.
All right, Mr. Bible, hot mics.
Welcome back. Jason Bible, Right Path Real Estate. I know we're talking about creating a good investing goal, good retirement goal. I read this article last night when I got back to Houston. I want to mention it. I'm going to need the whole segment to do it because I'm going to mention it. I'm going to read some quotes, and then I'm going to have to break it down so that it's understandable because these investment guys, I mean, it's like anytime you talk to someone, I'll give you the equivalent. It's kind of like you have a friend that's going through an MBA program, and they're around all their other friends, and they're all speaking this language that nobody really understands. It's like this corporateese, kind of like legalese you'll hear the attorneys use. So I got to break it down so it actually makes sense. So you can, and it's not because people are, not smart and that sort of thing. It's that sometimes these guys use a vernacular that just is a challenge to understand. It's like if you can't explain it to my 5-year-old, I mean, that's a good point. One of the things that you got to be able to do is the investment simple enough to understand. I've always loved Warren Buffett's rule on that. So let's take a look here. Article is titled Hedge Fund CIO, the investing story for the next 7 years is profit destruction. Hedge Fund CIO, the investing story for the next 7 years is profit destruction. Here's why this article is timely. I read this article last night, and what's the running article right now in the financial news this morning? At the close of the bell today, Apple is going to announce its earnings for last quarter. And the rumor on the street is it's not great. In fact, Tim Cook has already come out and said, hey guys, I'm going to buy $400 billion worth of Apple stock if the earnings aren't good. Now, let's be honest here. He already knows what the number is. So he's already come out ahead of the news and said, hey, if this doesn't meet investor expectation, I'm going to buy 400 billion shares of Apple. $400 billion worth of shares of Apple. In fact, there's a great article on DARK, D-A-R-K-BID, and it talks about the reduction of return on capital for the last 50 years for corporates. Meaning we're making less and less money. We are bringing less and less returns. I believe I understand why that is. I can explain it during the radio show, but it has a lot to do with politics, and it's going to anger half of y'all. Actually, it might anger everybody, to be quite honest with you, because it's on both sides of the aisle. We're literally taxing and regulating ourselves out of business. Republicans, Democrats, both are doing it. Let's get back to this article. Hedge fund CIO, the investing story for the next 7 years is profit destruction. Where will we be in 7 years? We're talking about stocks, which investors assume return 7% per year on average. Isn't that sad? 7% a year? That's a joke. 7% a year? I mean, our cash-on-cash return on rental properties is twice that. And that's not exactly a, quote, stellar deal. That's just a regular old real estate transaction. All right, let me get back to the article. We're talking about stocks, which investors assume return 7% per year on average forever. That means they rise 60% every 7 years, which could leave the S&P 500 at 4,300 in 2025. I want to read that again because a annual return is technically a compound annual growth rate. And you can divide it by 72, and that gives you a general rule of how long it takes to double. You can also do it in incremental fashion, and it'll tell you what the percentage is. We're talking about stocks, which investors assume return 7% per year on average, forever. That means they rise 60% every 7 years, which could leave the S&P 500 at 4,300 in 2025. Here's the problem. The only thing that should technically allow stocks to rise is corporate earnings. That's it. A company makes more money, the stock is worth more money. Period. That is the only thing that should make it worth more money. The only thing. Now, I'm sure some accountant will want to call the show right now, or CFA is going to want to call the show and say, Jason, but you don't understand. If they do this, their return on capital, they use more leverage. Look, for all intents and purposes, none of that stuff matters. Moving things around on the balance sheet shouldn't matter. You know what matters? More dollars in, less dollars out means it's worth more dollars. It's that simple. It is that simple. The financialization of companies over the last 20 to 25 years has led to some of these issues where they're not worth as much as they are. So, guys, spare me the drama. It doesn't work out as well as you think it does on your spreadsheet. But GMO now forecasts that U.S. large cap equities will return negative 2% per year in nominal terms each year for the next season, or negative 4.2% per year in real terms. What does that mean? In real dollars, adjusted for inflation, negative 4.2%. Leaving the S&P 500 at 2320, down 14% from today in 2025. What this article talks about is the destruction of the service sector, which is 80% of the U.S. economy. However, there's some really juicy truth in here. And it's down here at the bottom of the article. I'm telling you guys, this is where you have to find the truth now. It's not at the headline. In fact, the article is not even about what the truth really is. The truth in a lot of these articles is at the bottom or the bottom quarter. And it has nothing to do with the article. I mean, it does, but it's not what the article is about. But they let these little slivers of truth slip out. And here it is right here. I love this. Our worry is that the level of interest rates that hurts the real economy is now much higher than the level of rates that hurts the financial economy. I'm going to read this again, but I'm going to replace two words. Because if I replace these two words, it will make all the difference in the world in understanding what the statement is. You guys ready? Here we go. We're going to place these two words. Our worry is that the level of interest rates that hurts Main Street is now much higher than the level of rates that hurts Wall Street. Bingo. Meaning, Wall Street, the financial economy, makes money by borrowing money. Don't get me wrong, we do too in real estate. However, their margin is a razor's edge compared to ours. And in part, it has to be because they're putting trillions of dollars to work. But the level of interest rates that hurts Wall Street, their tolerance for interest rate changes is much lower than ours in Main Street. That's why I've told you guys for the last, 6-7 months now, I don't care what interest rates are. In fact, I know that interest rates have virtually no bearing on what we're doing in single-family real estate. However, if I were a Series 7 guy, if I were a CFA at a big hedge fund, if I were a CIO like this guy, Chief Investment Officer, if I were at CalPERS, if I were at one of these big funds, big educational funds, I would be freaking out right now because I know that as those interest rates climb, my margin gets crushed.
2 minutes.
That's why they're so worried about 25 and 50 basis point swings. For us in real estate, I don't even care if interest rates double. I don't care. And I've talked about that on other radio shows. I'm not going to go through it in this segment. You guys can find the old radio shows from the last couple of weeks. I've talked a lot about it in the last 2 months. Here's what's real fascinating. This is the punch in the face truth that a lot of people don't understand. Outflows produce indiscriminate selling. An index cannot expand its balance sheet to hold on to grossly underpriced assets. It just sells. Most of the trading that's done these days in your retirement account is by a robot. And if it's not done by a robot, the value of your assets in your retirement account, a significant portion of that is related to what the robots of other firms are doing. How retirement, the landscape of retirement in the United States right now is put your money into your 401k every 2 weeks or every month whenever you get paid, and then this magic firm puts your money to work out in the world of investing. And really, it's all done by a machine without any regard to what that asset is worth. I'm going to talk more about that when we get back from the end of the breaks. Jason Bible, Right Path Real Estate.
Mike's on.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give NextGen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Yeah, David, I
Are
just
you
saw your
expecting
comment.
to
That's a
close
big,
accurately on time
yeah,
and with
absolutely.
lots of communication on your
Big
home
difference between the
purchase?
technician and
You
the
come to
business
the
owner.
right place. I'm Jennifer Hernandez.
However,
Senior
I
Loan
will
Officer
contend
at Legacy
most
Mutual
people should not be
Mortgage.
business
Our
owners.
goal is to give our
They really
borrowers
shouldn't.
and referral partners an
I ought to have
amazing
Robert on the show
experience during the loan
sometime.
process.
We ought to do an
My
hour-long
team believes in
show
putting people and culture before
just
results.
off of
Our company concentrates on
our
building those
huge
teams who
disagreement
operate
with
structure,
what Robert
process,
Kiyosaki says
and
about being a
recognition
business
for
owner.
going the extra mile for you.
Personally, I
This
think
way, we have
that
the
book has
energy
probably
to
ruined
make
more
this your
lives than
best home purchase
has helped.
ever. Give us a call today to find out the simple steps to get
Great
started.
concepts.
I'm
People should not
Jennifer
implement what's in
Hernandez,
that book.
The Hernandez team at Legacy Mutual Mortgage. Jennifer.legacymutual.com or call 713-579-3611. Again, Jennifer.legacymutual.com. We can't wait to consult with you soon. NMLS 514497.
Equal Housing Opportunity Lender. NMLS 514497.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties. Whether it's a flip rehab or a rental rehab, we manage every aspect of a rehab from start to finish with a highly efficient, standardized process.
Over the last 6 years, Fast Track has completed over 700 projects, which has helped us to create our 3 keys to success. Use a detailed scope of work so that everything gets done, train and maintain quality crews so it gets done right, and complete the work in a proper order so it gets done fast.
No more managing it yourself, no more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992. Again, that's 832-742-9992, or reach us on the web at fasttrackremodeling.com.
Did you know that there are over $24 trillion in retirement accounts in the U.S.? Imagine if you could use someone's IRA to fund all of your deals. Well, you can. Quest IRA is based locally here in Houston, Texas. At Quest IRA, we offer retirement accounts that can be used to invest in real estate, promissory notes, private entities, and much more. Many of our clients loan money from their IRAs to fund real estate deals all over the country. We don't sell any investments or give advice. However, we do hold free networking events, weekly educational classes, and free consultations with an IRA specialist. For more information, visit our website at questira.com or call us at 1-855-FUN-IRAs. To tap into the $24 trillion in retirement accounts in the U.S., call Quest IRA at 1-855-FUN-IRAs or go to our website, questira.com.
Are small returns getting in
30
the way of
seconds.
your retirement plans? Why settle for mediocre results? There's a better place to invest. The experts agree, single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website, jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
This is Business 1110.
All right, hot mics.
All right, guys, I want to go through this just real quick. I got like 2 minutes here. Wednesday night, excuse me. Wednesday night, we're going to be at the in Dallas at Gillies. That's our next event. The next Houston event, quite honestly, I'm not sure. I don't have my calendar sitting in front of me. Go to rightpathrealestate.com. You can sign up there. Teach you guys how to do real estate the way we do it. I want to go back into this article. Banks are good heterogeneous risk takers. They'd scan the universe, observe a mispriced asset, and buy it, expanding their balance sheet. Then came 2008, the Volcker Rule. Now risk is taken by homogeneous indexes, narrowly defined mandates, pigeonholed perspectives with no latitude to think, and yet the system works provided inflows persist. Or perhaps it works because inflows persist. I want to make sure everyone understands what this means. When they mean inflows persist, that means money is coming in. The stock market works really well right now because there's more dollars coming in than are coming out. More dollars are going in and buying stuff than coming back out without any regard to the fundamentals of what these companies are worth. That's what you're investing in. That's why you look at the historic PE ratio and it's almost double what the PE ratio today is, price to earnings. You can invest in whatever you want. I'm just telling you, be very, very careful with the stuff that's going on in the stock market. It is historically overpriced, and that's not from Jason Bible. That's from a guy named Robert Shiller, who has a Nobel Prize, who invented the Case-Shiller Index. All of the experts who predicted all of the previous crashes, and I'm not saying anything's going to crash anytime soon, but I'm telling you, when I look at what's the historic value, what's it worth now, and it's almost double. I think it's 23, 24. Historic PE ratio is about 15. So where do you want to buy? Now, I don't mind it being, quote, overpriced if the earnings are relative. And we see price to earnings. The earnings are not relative to the price you're paying for these assets. It's not like single-family real estate where the prices are rising because there's so many people buying, because so many people are moving here, because more jobs are being created. I can explain the growth in single-family. Nobody can explain to me the growth in equities. They cannot. Just read some of Robert's stuff, Robert Shiller. Read some of the stuff off Zero Hedge. I mean, it's up to you guys. Y'all have got to figure out where you want to invest. But here's what I'll tell you. You better have that goal in mind. What's the goal? Are we trying to do an Ironman this weekend? Or are we riding the MS-150? Are we trying to retire in 5 years or in 20? What exactly are we trying to accomplish? And really sit down and figure out what that number is. Last note. This is the last
1 minute
weekend. May will be the last weekend retreat that we do. That is a full 3 days. The next weekend retreats starting in June are going to be 2-day weekend retreats. We are also not going to do it at this price point anymore. Our prices are going way up. I highly recommend, if you want to go and see Tom and I for 3 full days, Friday, Saturday, Sunday, May is the last month that will happen. You need to send an email to Veronica, support at Right Path Real Estate, if you want to sign up. May will be the last one that it's 3 days. From here on out, we go to 2-day weekend retreats for a number of reasons that we'll talk about in June. But if you want to see us, and you want to see us relatively inexpensively, go to rightpathrealestate.com or send Veronica an email, Right Path Real Estate, support at Right Path Real Estate. Thanks for listening, guys. Tom will be here Tuesday morning. We'll both be in studio Wednesday. I'll see you guys Wednesday night at Gillies. It's Jason Bible, Right Path Real Estate.
All right, Jay, have a good one.
All right, thanks.
You've been listening to Right Path Real Estate.